People are like, if I just make $1 million, I'm gonna find the love of my life. I'm gonna be liked. People are gonna want to talk to me. You start to imagine this world where money is gonna solve the mental aspect of your life, but that's not the case. It's its own aspect. So more money will not make you mentally happy. Then is a spiritual aspect, and this doesn't have to be religious. This is your purpose. For me, it's what is the reason why you're on this earth? What are you waking up for every single day? If you don't have a purpose, you're not going to have a reason to get out of bed no matter how much money you have. After you have the physical fitness, the mental fitness, the spiritual fitness, that's where the financial fitness has the biggest impact and the most power to help you live the most fulfilled life, because now money is just the icing on the cake, man. It allows you to live a more fulfilled and a happy life, because now you can do more of the things that make you happy. You can give more. You can buy more food for homeless people. You can do more things that give you happiness. Maybe it is writing books. Maybe it's traveling. Maybe it is giving. Maybe it is starting businesses. Whatever it is for you, you have the resources and the ability to do that, but that requires you to have that financial education and be willing to now go out of the way to talk about money and learn about money and understand that, hey, money is something that I need to understand. Money is something that I need to be willing to talk about. Money is something that I need to be willing to learn about, because most of us are never taught to think about money, myself included. Culturally, money is just one of those things, like even in my culture, my religion, like there's this concept called kirat karo, which means earn an honest living. Now, many people have interpreted that, in many different ways of, oh, don't worry about money, don't talk about money. And in the Sikh religion, there's also this big concept of seva, which means selfless service, giving back. And so there's this kind of like real giving aspect, which is great, and I agree with. But many times we overlook the idea of, how about the earning aspect? How do we earn? How do we take care of ourselves? Because the way I look at it is, if you want to be able to fill somebody else's cup, you want to feed somebody else, you have to be able to feed yourself first. And this is a lesson that my grandfather taught me. Poorness is the worst disease. And the reason why is because when you're at that level of poverty, that level of poorness, you can't even think about feeding somebody else. You can't think about helping another person, because the only thing on your mind is, how can I feed myself? How can you feed your family? When that's the only thing that you're trying to do, you can't worry about feeding other people. And that's where, for me, it was, I want to become successful so I can give back to my family, to my parents, give back to my community, and be able to do more things. Money at its core is just a tool. It allows you to do more of the things that you want. If you give a good person money, they have a tool to do more good. If you give a bad person more money, they have a tool to do more bad. So money, at the end of the day, is just like gasoline. It amplifies whoever you are, which is why we need more good people with money. I really think it's just a lot of insecurity. If we feel like we did everything right, we're working hard, but we don't have what somebody else has, something must be wrong. They must have done something bad. They must have done something that, we didn't see. So we create excuses, we create smoke screens. But the thing that we don't understand is the financial education aspect, because that is the thing that can make or break your finances. It does not matter how much money you make, what degree you have, who your parents are, where you went to school. None of that matters. It's what you do with the money you make. And this is one of those things that it can be very hard for you to understand unless you actually see it. 7 out of 10 Americans across the board are living paycheck to paycheck. 50% of Americans, or just about 50% of Americans making 6 figures or more, are also living paycheck to paycheck. The majority of Americans across the board, doesn't matter the income, are broke. They have little to no savings, they have little to no investments, regardless of how much money you're making. And the reason is not just because of what salary or job or what degree you have or who your parents are, but because of what financial education you have. And none of us are taught a thing about money, which is the craziest thing. So the 3, I think, biggest bad habits when it comes to money. First, probably the most obvious, I would say, is people following the 2 S's, where you're spending or saving all of your money. You'll never become wealthy if you do that. Number 2 would be you blindly follow the system without questioning the way the system works. And number 3 is you don't understand how money works. So if we start with number 1, the 2 S's, save and spend. Now it's interesting. If you look at the financial statements for the majority of people in America or even across the world, the way it looks is you make money, you pay taxes, you spend money, and then you wonder where all your money went. The majority of people don't have any plan for their money, and that's why the majority of people have little to no savings, and the majority of Americans have little to no investments. About half of America has zero investments. And I'm talking about zero 401k, zero IRAs, zero stock market accounts, zero real estate investments, zero gold investments, nothing. And then out of the next half of Americans that have an investment, only half of those have an investment outside of their 401k or IRA. So you have a very small percent, about a quarter of America, working America, that has any investments on their own. When you go back to the saving and spending, we're in a spending culture. America has a consumerism culture, and I joke about this, but the way I like to say it is traditionally Indian people make $1 to spend 20 cents. American people make $1 to spend $2. This is just the culture that we're in, where it's very okay and normalized to spend money. And what are you doing? Well, you're spending all your money making everybody else around you rich, but you yourself, you might look rich, but you're actually broke. There's a reason why the owner and CEO of Louis Vuitton is the richest person in the world, whereas the majority of people who wear Louis Vuitton are broke. The people who are wearing Louis Vuitton are trying to look rich, and how are you doing that? Well, you're making the owner of Louis Vuitton rich by doing that. And so this is where you got to understand, there's nothing wrong with wearing designer stuff. There's nothing wrong with having nice stuff. There's nothing wrong with wanting nice things, but you have to be able to afford it first. I used to guest teach in Detroit public schools. And when I used to teach there, it's a rough school district. I would talk to the kids about life, motivation and entrepreneurship and money and success. And one of the things that I would ask is, how many of you have a job? Almost all of them raised their hand saying that they had a job. My next follow-up question was, how many of you have a bank account? Nobody raised their hand. So I asked, what do you do with your paycheck? They said, well, we get a physical check, then we go to the liquor store, we get it cashed. The liquor store owner takes 1 to 10%. Then you buy pop, candy, a bunch of junk on the way out. And by the time you're out of the store, you've already given away half of your paycheck. I call it a net zero thinking, where we think in terms of spending. If I have $1,000, I can go out and buy this handbag, this nice thing. If I have 10 grand, I can go on this nice vacation. If I have 50 grand, I can go on and buy this nice car. We think in terms of spending because we think, if I have this money, how can I spend it? Now, if you break away from that and now you start creating a buffer and you don't spend all of your money, the next problem is we save our money. Because for me, the only financial education that I was given was save your money. Because if you're not spending it, now you are building up a big bank account, and if you have a big bank account, you'll be wealthy. But the reality is, you will never be able to become wealthy through your savings. Your savings will never make you wealthy. And if you don't believe me, I'll give you just a mathematical term. Your savings right now are growing by essentially nothing, but let's just say 1%. And I'm being very, very generous here. If your savings grow by 1%, and inflation is higher than 1%, and we can see now inflation is extremely high, but even before the 2020 pandemic, inflation was still higher than 1%. We were 2 or 3%. Inflation means that the value of your savings are dropping. So if inflation is higher than your savings, that means that your savings are losing value each and every day. Every day that you save your money in the bank, you are slowly becoming poorer each and every day, and most of us never see it happen. Now, this doesn't mean you shouldn't save any money. This just means you have to understand how to save your money strategically, because wealthy people do not want to save all their money. They want to save their money for an emergency, they save their money for an investment, or they save their money for a big purchase. If it doesn't fall into one of those three things, you don't want to save your money, because now you're saving money. Your savings are just making you poorer each and every day. This brings me to then the second aspect, which is blindly following and trusting the system. And this one was the most difficult one for me, because growing up, most of us, myself included, are always told that if you want to become successful, go to school, get good grades, get a good job, climb the corporate ladder. For me, it was go to school, get good grades, get into medical school, become a doctor. That was all that I was told. Since I was like a little baby, my parents would tell everybody, Jaspreet is going to become a doctor. He's going to go out and do medicine, this and that. And that's what I was always told. And I was not really against it, because I wanted to be successful. I saw how hard my parents worked. Since I was a kid, I always wanted to give back. And I always assumed that, okay, if I got good grades, I'll get into a good medical school. And if I do good in medical school, I'll be able to get a good job as a doctor. And if I get a good job as a doctor, I'll be able to make more money. That was one of the reasons why growing up, anything that was not medical or academic related, it was completely discouraged. And sometimes I think it's very difficult for someone to understand what does it mean that, like, you know, your parents really wanted you to be a doctor, because it wasn't like an option. And I think the best example that I can give of that was when I was in 8th grade. I was like, you know, 12 years old. My parents got me a tutor, not for the English class that I was on the verge of failing, not for the other stuff that I was studying for in 8th grade, but for the medical college admission test. The test you take in college to get into medical school, my parents got me a tutor for when I was in 12th grade. We didn't spend money on a lot of things. The only thing that parents were willing to spend money on were things related to academics to get me into medical school. And so here I am in 12th grade, I have an MCAT tutor coming to my house, and he's like, wait, this is the kid that I'm teaching about medical school to get him into medical school? And like, that's how strict it was in my house. So I was checking all the boxes. I was doing good in school. I was studying hard. I was getting good grades. But then along the way, I realized that something wasn't adding up. Everybody in America in this system needs to be a business owner if you want to become successful. Now, the one thing that I want to caveat that with is the majority of people should not try to start a business, and the majority of people should not try to operate a business. Now you might say, Jaspreet, you just said everybody should be a business owner. How does that make any sense? Well, you can own a business without working for the business. And now this is the question of, what are you doing with your salary? What are you doing with your income? You can either build the equity by starting a company yourself or by building a home, or you can buy the equity. Now, how do you do that? Well, you have to understand the wealth formula. The wealth formula that I've come up with is you take your income minus your expenses, and that equals your investments plus your savings. So if you take your income, the amount of money that you make, and now you subtract all the things that you buy, your rent, your mortgage, your car payment, your groceries, your gas, you take away all of your expenses, and if you have a margin, well, now you have extra cash. Now you can save all or some of this money, but if you don't save some of it, then that money can be put to work in your investments. These investments, like I've been hinting at, is what makes wealthy people wealthy, and it's what keep wealthy people wealthy. These investments can be in the stock market, because anytime you buy a share of any company, if you go out and buy a share of, say, Amazon, you become one of the owners of the Amazon corporation. You get to share in the profits. If the Amazon valuation goes up, your stock price goes up. The second way would be through real estate, not through your home, but through a real estate investment, buying a rental property that you're buying for the sole purpose of making money. This is something that can pay you every week or every year, every month. Then it can be through your own business, or if you don't want to build your own business, you can invest in startups. It's much more accessible now. You can own physical gold. You can invest in cryptocurrency if that's something that you believe in. So there's a lot of different ways to build this equity, but this is where now you need to be putting your money to work to actually buy and own and build this equity. When I was in high school, I really wanted a Ford Mustang, but my dad was like, no, you can't buy a Ford Mustang. I wasn't going to get that car. But this is, again, when stock prices had crashed. And the next best thing, if I couldn't buy a Ford Mustang, and I started reading the business books then, was how about I buy some of the Ford stock? Again, I didn't have a lot of money. My first investment in the Ford stock was $2, because that's how much the stock was trading for. Now it's much higher, but what I'm trying to get at is, you know, you can start with a very little amount of money. I mean, nowadays with the new age of stock brokerages, if you have $10, you can start buying this type of equity. You can start building this type of equity. But the key now is the consistency and how often, like doing it all the time. Because when I say consistency, people say, oh, anytime I have $100. Well, okay, what you want to do by consistency is make it automatic. Anytime you get paid, take a portion of that money and automatically invest it. Now, the next question is probably, where do I put this money? Do I just throw it into Tesla or Amazon? Well, if you're not willing to do that level of research, where you don't want to try to find the best companies, you don't want to invest in real estate, you don't want to get into the more, let's say the more advanced type of stuff. You want to just put your money to work. Well, the simplest thing you can do is look at something called an ETF, which is an exchange traded fund, which gives you exposure not to one company, but many companies, maybe hundreds of companies. For example, there's something called the S&P 500, which is a group of the 500 biggest companies on the stock market, essentially the 500 biggest companies in America. You can invest in the S&P 500 by investing in just one symbol. So you invest in this one thing and you're getting exposure to 500 different companies. Now you don't have to worry about what each of these 500 companies are doing. You're just investing essentially in America, the future of the American economy. If that's something you believe in, well, now every time you get paid, put in $100. And now you just do this for the long term, whether the market is up or down, does not matter. It should not change your strategy. You just keep passively investing your money, make it automatic, make it passive. That way you don't have to even worry about it. And now you just keep building it up, because now it's the whole idea of compounding. You don't want to just throw your money in at once. You want to put a little bit of money and let that grow, put more money and let that grow, put more money in and let that grow. I made a couple of videos where I talked about two people. One was a janitor, one worked in a school. Both of them made very little income, yet both of them retired very wealthy. And the reason, and I'm talking about in the millions of dollars, and the reason why they've been able to retire with $1 million plus was because they took a little bit of money every time they got paid and they just invested that money. It did not matter, what else was going on in the world. They always paid themselves first. They always invested in assets before they started going out and buying things that made them look rich. Every single time. And when you put that little bit of money to work, whether you're starting with $25 or $250 or $1,000, when you put that money to work and you do that consistently over time, you can build real wealth. I mean, if you look at a compound calculator, a few $100s a month compounded from the age of 21 to 65, getting an average rate of return. I mean, we're talking about millions, but it just starts with making that small investment first and being consistent with it and always being willing to learn.